Good afternoon, good evening. Welcome to Traders Workshop. I'm your host, Tom Schneider, CMT with NinjaTrader. Traders Workshop, where we like to bring in experts from our NinjaTrader ecosystem to talk about their expertise and how it pertains to today's markets. Before we get into it, I'm really excited to bring on our next guest. He's been on here before, but before we do that, I do want to take care of a bit of housekeeping. Remind everybody that futures and options trading contains substantial risk. Is not for every trader. You could lose potentially all or even more than all of your initial investment. That's why we recommend using risk capital. What is risk capital? It's money that doesn't keep you up at night, doesn't extend your retirement horizon, doesn't it's money you can afford to lose. Let's just put it that way. Also want to remind everybody that past performance is not necessarily indicative of future results, and what we talk about here on the show contains neither trade recommendations nor financial advice, but should be used solely for educational purposes. And with that out of the way, it is my honor to welcome Alex Cole from GoNoGo Charts. Alex, how you doing today?
Doing very well, thanks, Tom. Always good to see you. How are you?
I'm doing great, and surprisingly, I was able to step outside between shows. Very warm, and I'm on Long Island in New York. You're not too far away.
No, it's been a strange couple of weeks. It was really hot, maybe, I don't know, a week to 10 days ago, 75, and then it got pretty cold. And then now today it's pretty humid. It's sort of almost muggy out there, and mid 60s. It's almost 70. It's a strange couple of weeks we've been having. But it'll get cold, I'm sure, at some point.
Right. I think we're seeing maybe the last days of a nice fall season. Fall season tends to be short out here. But how have you been? We haven't had you on here for a couple of months. Everything going well?
Yeah, very well. Interesting times for the markets. Interesting times for us at GoNoGo Charts. Interesting times with family. Last night, my son was, sort of too old to do the trick-or-treating thing, which like, oh, okay, you're just gonna hang out with your friends. So that's what they did. But my daughter at 13, she still made the rounds, got a lot of really bad candy to bring home.
That's amazing. I mean, I remember Dylan and Lily as being, these two
I know,
little
I
kids,
know.
miniature Alex
Yeah,
running around.
Dylan is 6 foot. He's about an inch taller than me. He's doing driver's ed in school this year.
Oh,
It's nuts. I mean, yeah, we remember we were, back then when they were little, and then remember Dave Keller was having his when we were at Bloomberg, and he was up all night, and we are all sharing baby stories. But yeah, time has certainly flown a little quicker than you could even believe.
yeah. And you speak about your son, my son too.
I
He just
know.
got his driver's license on
Yeah,
Sunday. You know, uh, we're just waiting for it to come into our hands, and then they
yeah,
do a weird thing too. They do like a junior driver's license, and I think at 18 they get a senior license or a regular license. So much different from what I experienced when I was, his age. It was just a driver's license, and that's just, I think, a factor of being Midwest versus out east. But yeah, it's crazy how time flies.
unbelievable, unbelievable. And you're already in that sort of probably having to think about colleges.
Yeah. Oh yeah. My daughter is in college right now, second year,
Oh,
and he has actually this weekend another milestone, started applying to his first round of colleges early. He was kicking and screaming a little bit, but he did it, and it's just like I said, time marches on. All good things.
yeah, good stuff, good stuff.
So let's talk a little bit about you and Go No Go. So,
Yeah.
like you mentioned, we worked together at Bloomberg, but what we worked at Bloomberg was very much technical analysis based. And I know you had these ideas about what you're doing here at Go No Go, years ago when we first met, almost probably 15 years ago. So, can you expand on kind of the origins of what you do at Go No Go and how it can help traders?
Yeah, absolutely. And so I was when I entered Bloomberg, we're going to date ourselves, but it was probably 18 years ago, I think, when I first sort of walked through the Bloomberg doors, and I was fascinated by technical analysis pretty quickly. I mean, you as a mentor, even when you guys came across from CQG and Eugene, and just I got really quickly fascinated by technical analysis, and I thought that for me, it was going to be a way to understand the markets that would make a lot of sense. But as we all do, you quickly sort of get absorbed in the study and the reading and the research, and you end up, trying to just understand everything and trying to put all of that information into play so that you can get a real sense of what's happening on anything from a technical perspective, but you get really deep down the rabbit hole and end up, complicating things and getting yourself confused. And so that was the sort of beginnings of the idea, I suppose, however long ago that was. And then throughout my time at Bloomberg, I would see that same problem, whether it was people new to the industry. I was responsible for a while, as you were as well, with training all the new hires into the analytics program for technical analysis, and also for training clients on technical analysis. So new people coming into the industry were experiencing that problem of trying to, they read about RSI, they'd add it to the chart, read about Bollinger Bands, add it to the chart, read about stochastics, add that to the chart, get excited about this, add that to the chart. And before you know it, they're like, well, I don't know what I'm looking at anymore. And you try to sort of look for things like supply and demand, market dynamics underneath the price chart, and it's very difficult to see because of what you've added. And then even beyond new people, when you start talking to people with a really sophisticated understanding of technical analysis, the same problem was there. I remember talking to research analysts trying to explain things to the buy side, saying, okay, here's where I think we should start getting long, but then their process on the chart is overwhelming for the buy side to understand. They would like a way to just say, look, the technicals are all lining up to say that the trend is in place. And so, from all different sort of areas of the industry, that was the problem that we were experiencing, that of overcomplication, confusion based on good technical analysis, but clouding your decision making. And so that's where we end up now with GoNoGo Charts. Is the core concept is to blend multiple foundational concepts, the real sort of solid stuff that you'll have seen, the tried and true tested ideas, blend them into one thing that color codes price based on the strength of trend. And so that's the core concept, and that's what you see with the GoNoGo trend chart. And then, following on from that, and stop me if I'm talking too much, but following on from that, the idea became, let's give a complete, total view of technical analysis, but following the same principles of keeping it simple and easy to view. So from that, we needed to create the sister panel that included a blended view of momentum. It included volume. It includes volatility. So for me, going and talking to clients, I can have an intelligent conversation about any asset and any time frame and give a good understanding of the complete technical view with just one chart, which hopefully is then not overcomplicated and easy to look at.
No, I mean, you said a lot. This is great. This is great explanation. And one thing that I, probably saw as you did was like that fascination with new tools, right? And I kind of liken it to Halloween candy last night with my kid, right? He comes back with this huge bag, and how do you even process all these different candies that look so attractive? Yeah. But we know there are some better than others, right? And so it's kind of the same thing. What tools? Wow, I learned about this oscillator, the McClellan oscillator, the RSI, the stochastics, the MACD. If you're new to that, you might not realize, hey, they're kind of measuring the same thing, right? They're measuring momentum.
Yeah, and that's a great point that you make there. It's the redundancy oftentimes of what you're looking at on the chart that really is where I was able to help, even before at Bloomberg, before sort of finalizing this idea that was going to come to fruition with GoNoGo Charts. But the cleaning up of people's charts and saying, look, what do you get from that panel that you don't already get from looking at RSI, or being able to remove things because of the redundancy that you're talking about. And that was a big part of it, because like you said, a lot of them are trying to identify the same situations, right? So that's a big piece of this. And I hope that you can see how when you blend all that into one oscillator, you can still find those situations. And I think that's kind of the idea, trying to narrow down your focus and sort of say, what am I looking for? I want to get a sense of trend. I want to get a sense of momentum, so I can look for areas of overbought and oversold. I can look for areas of divergence, very important foundational concepts. I want to get a sense of what volume is telling me and if we're seeing anything interesting in terms of volatility. So once I decided that those components would give me a complete overview, then it's like, okay, now do you need 14 panels to give you that information, or can you distill it into something that's a little easier to see?
Yeah, and you'd as we both experienced, you'd see these charts where the data, to me, price is king, right? Price
Yeah.
is what you need to know, price is what you should focus on, and then everything else is kind of an addition to it, just as important, or maybe not as important, but very important still. But then you'd have these panels, 14 different panels underneath. It's like, how do you, and sure, you can blow them up, but I want to compare price to that oscillator for the very purpose that you mentioned with divergence. I'm a big believer in divergence, and it's not always there, but when it is, it's pretty strong. But you mentioned, I think, four things, maybe five. I think trend, momentum, divergence, volatility. I might be missing one, but even then, you could have 7 oscillators that are telling you momentum, but if you ignore those other pieces, you could be wildly off on your decision making, and not having the full picture could really hamper what you're trying to do.
Yeah, and I think you said it about price. We believe price is the most important indicator, and just something as simple as being able to quickly see levels of support from prior lows, to be able to see quickly, what price is doing. There's a quote that I love that's I'm going to butcher it probably, but it's ultimately it's the dollar weighted average of the opinion of all market participants that determines where a stock goes, and that consensus is analyzed by looking at price. Right, that consensus is in the price bar, the dollar weighted, people putting their money where their opinion is. That consensus is the price bar at the end of the day. And so you go back to things like Edwards and McGee and some of the earlier books that you read, and pattern analysis. I place a lot of weight on that too. Like, if you can see, you can call them whatever you want. And when we used to teach it, I used, teaching patterns to new people in technical analysis. You can find a name for it, you can remember all the names, or you can say, look, you can clearly see that the market dynamics underneath this chart are causing sellers to come in more aggressively, and that gives you a higher low, right? And if you look at where, a higher low if you're getting more aggressive buying, and then let's say your sellers are keeping a horizontal level where they're coming in to sell, and if you're seeing buyers coming in more aggressively and making higher lows, but sellers holding at the same level, you can call that an ascending triangle. You can find, but that's what's actually happening, and it's allowing you to see that activity on the chart. So patterns can be done really easily if you have one big price panel. You can see, people talk about head and shoulders all the time. We know why those happen. We know what's happening underneath, where people trying to push things to a higher high fails on the right shoulder. And, obviously that's a bit more bearish, because why didn't it go to make a new high? And there's a neckline, which is support. People found that level to have value before. Why didn't it find support again? Why did we break that level? So you can find a head and shoulders, but it's actually the market dictating what you can see on the chart. And if you add so many things to your chart that you can't see that kind of thing, like you said, you can really miss a large piece of the puzzle. Or if you concentrate on 7 momentum oscillators, like you said, have you thought about volatility? Are you missing something else? So it's very, very important.
Yeah, for sure. And I like the way you explain patterns too, right? Patterns, it's easy to get wrapped up in the names and the shapes.
Yeah.
But you have to understand the forces, or what's happening in the market, to create that pattern, right? Where are buyers coming in? Where are sellers coming in? Where are sellers exhausted? Where are buyers exhausted? Creates those patterns. If you understand that, you almost don't need to know the names of the patterns, right? You just see it. Oh, okay, moving on.
And the same thing can be said about, even support and resistance. At this level, let's say with resistance, sellers have thought this is where it's expensive. And then if that level is broken, you can say, oh, we've broken a line of resistance. Or you can say, for whatever reason, the market now agrees that it's moving to a new range of trading, right? That level has no longer become expensive. And so the security has moved and it will find a new range or find a new level to trade at. And, it's a horizontal level of resistance, but that's what's actually happened. The buyers have overwhelmed the sellers at that level and moved price higher. And we do some work with clients too that are using go-no-go charts to get a sense of the technical analysis, but also doing Elliott wave theory, and the wave theory, again, should be, I think, when it's taught, explained by market dynamics. What's happening on that? Why is that third wave so powerful? Why are people coming in? Because they're starting to recognize the improving fundamentals that were only seen by that, that sort of maybe smart money in the first wave up. Now everybody's starting to see things changing and getting into wave 3. There are reasons why you can draw things on the chart or see patterns or do this kind of analysis.
Right. And I think in teaching, sometimes we get wrapped up in the construct and the calculations and maybe gloss over the reasons for that. And I think you have to start with the theory. You have to start with the reasons.
Yeah, and you have to, for a test, you have to remember the name of this pattern, and
Right.
you have to remember, how you would define it based on what's happening with this and what's happening with volume, and is this higher than that, But I think in the real world, understanding why these patterns become obvious on the chart in the first place is probably more practical and more important.
I think it's probably a good time to switch to the charts. I'm looking at your chart. I have access to your chart now that everybody could see that. And to me, it's just a very good use of color, of visuals. And I'm always a big fan of data visualization. So there's a little bit of creativity here. And I should say, I'm downplaying it. There's a lot of creativity here. Can you explain kind of, and what market we're looking at, what time frame? Yep. And if we could eventually get down to like maybe a 10-minute chart or a 15-minute chart, just to see what's happening today.
Yeah, absolutely. And just like you mentioned there, I'm going to zoom in just a little bit so we can see the the colors perhaps a bit more clearly. But there was quite a lot of research done from my end on the colors, because I like you, I think we technical analysts, I think, are the original data visualization experts of the financial markets, right? We took that information and we created a visual. But I think we kind of stop sometimes at the traditional chart. And I think we can do a lot more, and we can talk a little bit about the icons and things, the way we can interact with the chart a little bit. But the colors themselves, the feeling, the blue is world renowned if you research colors as a color of sort of good and hope and strong feeling, And so I wanted to make sure that they were colors that represented what we thought about the state of the trend, but also colors that work well together. It's a visual thing after all, and perhaps people have told me I should have been an interior decorator in another career. I'm very good at picking paint colors for walls. It drives my wife crazy because she's like, I want this one. I'm like, I think that one's better, and then she'll say, you know what, you're right. That's a good color. So I like the use of colors to help display or represent information. But so just to quickly walk people through it, what you're looking at is the price bar being color coded based on the strength of trend. And obviously the name probably suggests where we're going with this, go, no go. We use that terminology because it's like the pass fail kind of system that you might know from military lingo or NASA, where you wouldn't send $1 billion of rocket ship up into space unless things were a go for launch. And that's the same kind of idea we're trying to get across. And such a big part of this is risk avoidance and managing risk, and we'll talk about that as well. But the idea is that you don't want to put a lot of your money into something unless the conditions are telling you that you're a go for launching that investment. And while you're in a no-go trend, the no-goes are the pinks and the purples, then you're sort of saying, look, the weight of the evidence, the combined blend of technical analysis tells me that we're in a no-go trend right now. And if you think about it in terms of long only, then you would wait for a go before you're saying, okay, conditions are right to launch our investment. Now, these are long, short applicable, so we can definitely use no-goes to trade that side of the market. But that's what we're looking at. And then on the other side, we've got the strong blue colors as the strongest form of the go trend and the aqua as the weak form of the go trend. We wanted to build in some weakness to these trends. So when you see markets pull back, then we'll display that with aqua bars, and the same thing with the no-go, then they'll be pink. And then the last color is this amber that we have in the middle, and we call them, we've got go and no-go, we call them go fish bars, because actually it's funny, is a Jesse Livermore quote where there's a time to go long, time to go short, time to go fishing. So when the market is not giving us trend and it's sort of being uncertain, we'll see the trend indicator paint the bars amber, and that often happens in transitionary periods between moves, of course, or also just, you see them sprinkled in with sideways markets. So that's what we're looking at in the main panel, is the trend, the go-no-go trend indicator, coloring the bars based on trend.
Okay, so great. I have a couple comments or questions. Of course, we're talking about this. You mentioned it as a long bias. So in the futures market, obviously, we can go both sides, right? Yeah. And that was going to be my question. You answered it. Can the no-go be anticipated as a go for the other side, right? If we were to switch things around, if we were short biased, no-go would be our, let's say that we are biased to the short side. Yeah. Also, this is on a daily chart, I believe. Yeah. So, this is just in terms of a daily look at trading, meaning on a daily chart, I'm kind of longer term trader, right? I'm taking a position that isn't an intraday position. It's a bias according to the go-no-go trend study here. It's more about, okay, I'm going to use a daily chart and have a longer term period. This is also something that we talk about in our bookend shows, Jim and I, which is, what is our bias for the day? Yeah. So this might be also a good help with, I've got a deep purple versus a more of a lighter, I don't know what you would call that color, pink, let's call it pink, aqua, and then we've got the blue. Those might help us with our conviction with the trend for the day. And of course, amber being, it's a coin flip, right? You're not saying let's go long, let's go short on a daily. So our bias might be for the day. You know what? Let's see what the intraday chart tells us. But for sure, these colors might help you with bias when you're day trading. Hey, this is a dark purple. This is a dark blue. So I've already got a bias for the day in my head when I go to the intraday charts.
Yeah, we talk about multi-time frame analysis a lot. And exactly as you're stating, depending on who you are, who you're talking to, we have some clients, obviously in the professional space, they're money managers or they're rebalancing, once a month, they might be looking at weekly charts as their bias and then moving down in time frame there. But we also have clients that are day trading e-minis using 1 minute charts but just having a sense of what is my overall market perspective, that helps you trade in the direction of the trend. So for example, if we're in this no-go period here, and then you drop down in time frame, you're looking at 5 minute charts and you're trading all the no-goes, then you're going to be trying to line yourself up with the larger trend, which is to the downside, as long as as long as you've got the no-go in place. And the same thing then, of course, now we've finally entered into a go trend. So you could, as a day trader, be saying, okay, now I'm going to be looking for go setups on my 3, 5 minute, 15 minute, whatever kind of chart you look at. So absolutely, multi-time frame, giving yourself a larger time frame bias just to sort of stack the odds a little bit more in your favor and putting you on the right side of the trend is definitely something we work with clients as well.
And we talked about blending technicals. In this view, are we looking at purely oscillators, or is there a little bit of moving average analysis in here? And I don't want you to give away the secret sauce, but maybe an overview.
Yeah, absolutely. Because I'd love to do that, because that's one of the criticisms thrown around at technical analysis all the time. Well, yeah, but what's in there? Is it like, are you looking at the moon? Some ridiculous things we heard over our time at Bloomberg? But no, it's the foundational principles basically of technical analysis, the things that have been on everybody's chart for a long time. So just to give you an idea, in the main panel, these are almost exclusively trend ideas. So think about things like, where's price relative to a moving average? If it's above the moving average, that's inherently bullish. because we're saying that price right now is trading higher than it has over the past however many days. So if we can check that box, then that's going to plug into our trend calculation, and that'll get it closer to the blue colors. It might be also something like, trying to think of examples without giving stuff away. But, I like the idea of looking at the average of closing prices over a period relative to the average of open prices. If in general we're closing higher than we've opened, then that suggests bullishness to me, right? Like each day we open, we close higher, we open, we close higher, we open, we close higher. So if you look at an average of closing prices to opens, and those, that's higher over a period, then that's another good bullish indication. And you could think of any number of things like that, but it's those kinds of trend following concepts that if they all line up for us, then that's when we start painting the bars go, and then stronger go obviously would be more of those conditions being met. When you talk about momentum, as you just did, that's where we look to the bottom panel. And the bottom panel is the same concept in that we are blending all of the foundational technical principles of momentum now into one oscillator that I think can give me all the information that I would have got from RSI and stochastics or any number of other things. But I can get that view of momentum just from the one oscillator. So it was very important to me, just real quick, to be able to read it in the same way I would read a good momentum oscillator, meaning I can see divergence right here, where we've got a higher low on the oscillator and we've got a lower low in price. Like you talked about how powerful that can often be. So you can use this just as you would look for momentum divergence on any other oscillator. You can also look for extremes of overbought and oversold. So when the oscillator is getting overbought, then it lines up with a peak in price. When it's getting oversold, it lines up with a trough in price. So just the traditional use of a momentum oscillator, you can of course do that here, but blending the oscillators together and calculating it in a different way gives me extra momentum value. I think if you want me to go into it, there's a significant piece that's different from most other oscillators.
No, I think that's great, because what you're doing is you're equating what people usually learn about with those oscillators. Oh, when I learn about RSI, I learn how it's calculated, I learn how to interpret it, but I get the general sense of an oscillator. Then I move on to MACD, or I move on to stochastics, or I move on to even some of the more, not as traditional. I would put commodity channel index up there with the stochastics and RSI, but they all have the kind of the same component, right? They're momentum based, so they're wave based. What happens at the extremes, and then how does it follow the price? And this is an example of kind of combining all of them into, crumpling up all the stochastics and RSIs and MACDs into one oscillator and interpreting it basically the same way.
Yes, and the one thing that I would say that it really, you don't want to sound too big-headed or too full of yourself, but the one thing that we found working with people is gives extra value for this is that if you think about the typical calculation of momentum oscillators, they were designed primarily in the 70s, where the market was sort of range bound. So identifying those big swings and then mean reversions, that was what they were designed for. So there was a lot of research done after that in terms of, can you use oscillators in trend? And Connie Brown wrote books about it, brilliant stuff. And what we find is that these oscillators tend to range when in a trend. So, you know as well as I that markets don't move in a straight line. So when an oscillator goes overbought and comes back to neutral, it'll then go back to overbought again and back to neutral if that trend is strong. It shouldn't go oversold. So then you start to try to find ranges on your charts could be different for foreign exchange, could be different for futures. Should I look at 40 to 80 for the RSI? Should I look at 35 to 75? Is that where it tends to range? But they're very fast moving indicators. So then you're sort of faced with some subjectivity. What if it comes down to 42? Would that count as a touch of support? What if it goes to 38? Does that break 40? Does that count as a break of support? Is the trend over? So I wanted to try to incorporate that research and that idea. And so what we did was we calculate the oscillator here in a way that when all of the blended inputs go to their neutral territory, the oscillator tags the zero line. So from either above, it'll come to zero, or from below, it'll go to zero. So then now we have a completely objective level that can be used as support and resistance in trend. And so just to give you an idea here, we were in a go trend, and if you pull back the chart, I don't know if you can see how it comes down and it finds support at the zero. We're in a go trend here. When it weakens, and these icons we can talk about, when it weakens, we see that trend weakening to aqua bars. We're watching the zero line here to see if the oscillator will find support, because it should in a go trend. The oscillator shouldn't be giving us any oversold readings, excessive selling if that trend is healthy. So when it breaks below zero, then we know that there's a bit of a threat to this trend. And then of course the no-go follows. And now we're looking at it in a flip, on the flip side, we're in a no-go trend. We expect resistance at zero as momentum surges to the downside, comes back into neutral, surges to the downside. And so the same thing here, we see trend continuation every time we find resistance at zero. When it doesn't, then that gives us a leading indication that this trend to the downside is being threatened a bit more than we'd expect. And of course, then you get the trend confirmation. So that sort of objective level of the zero line is very important when we use it and the way it interacts with the trend indicator.
Right. And this is almost kind of meta, but we talk about not using indicators alone, right, in a vacuum. And what you're doing is you're finding another way to see, is there something I can tell about the top part of the chart with the go no go trend indicator? Can I anticipate when it's going to change, or do I see something characteristic or not about the trend using the squeeze indicator there?
Yeah. And that's just the other couple of components that we talked about at the beginning. I wanted to have everything in this one view with one price panel, one oscillator panel. So you'll notice when the oscillator goes to a dark blue, that's telling me that volume is heavier than average. So that's our volume piece. So you can see trend ending, trend becoming a no-go, confirmation of heavy volume throughout this period of the trend. And then, like you said, using other things to add or insight or to confirm or to not confirm what you're seeing in the price panel. On this move lower, we see lighter volume. That's traditional technical analysis, technical analysis page, whatever, right? Volume, you want to see volume confirm price. And so for this part of the move down, we're seeing heavier than usual volume. And then on this lowest low here, we see light volume and we see higher lows. You've got bullish divergence. You see a break of the zero line. You put it all together and you've got something a little bit more constructive happening here than we had at any other point during this no-go. So you could be potentially anticipating some trend change. And then the piece, is the volatility piece, which we'll see probably on some other charts. Maybe it'll be more evident. But for you, everybody, I'm sure, familiar with volatility squeezes, Bollinger Band squeezes, Keltner Band squeezes, any number of those things. So again, with the blend that's in this oscillator, we try to visually represent those situations by building this grid, because for our indicator, if it stays at the zero line, instead of just being rejected, if it stays at the zero line, that tells us that we've got momentum neutrality, directionless momentum. We've got this sort of cooling off of buying and selling and this sort of reduction of volatility. So the longer it stays at the zero line, the higher this grid climbs. And that tells us, okay, now we're in a volatility squeeze. When that gets broken, that can lead to, how the feeling in technicals is that once you've got a breakout of reduced volatility, it can lead to larger volatility. So with that, then I have, I think a way to interpret the technicals with the one chart, depending on who I'm talking to.
Awesome. Today, let's talk about today's activity.
Yep.
So we started before the market, regular trading hours open. We were up. We had nice big on a candlestick chart. We had a nice green candle, looking good. And then we're talking about FOMC, and we look at the FOMC matrix. We know what they're going to do tomorrow, but still, it's not so much what the rate hike is, it's what they're going to say after that could move the markets. Big focus on tomorrow. But today was, man, big move down after we had some economic reports. Can we take a look at an intraday chart and just see, is there anything that as a technical analyst we might have observed going back, let's say around the 9 o'clock hour, right before the market did withdraw. And just so everybody knows, Alex is in the process of putting his indicators on the NinjaTrader system. This is what it's going to look like when it gets there. We're not quite there yet. We're probably a couple weeks, maybe a month away. And as anybody who's had any experience with developers and development, it's tricky business, and the good developers will develop good work at their time, and so you always have estimates and it goes over. But right now, Alex is showing you what will be available on NinjaTrader as we can. So.
Yeah, and I'm so excited. It really is. I actually think in this case it is only a couple of weeks away. So, like you said, you never know. But I'm really hopeful that it should be this month. We'll have something in the ecosystem. But this is, so you talked about. I think I pulled up a 3-minute or a 5-minute chart here, and this was pre-market. Same as you. I got it this morning. I checked the charts, and I was like, oh, we're up 1%. So then, we always talk about not predicting, just reacting responsibly as technicians. But you're curious, to read about what people are thinking and what's going on. So the sort of thought was that, like you said, everybody sort of knows what the rate hike's going to be tomorrow, but it's more about the words that are used afterwards. What can you get out of what they say in terms of how aggressive or not they're going to be in the next one or in the future, and how much of that is priced into the markets already. And so this was pre-market. This is sort of 5 a.m., 6 a.m. And then we just really kind of just took off to the downside. I mean, as soon as the market's open, we've got a nice go trend here. We've got an amber bar that happens between the go and the no-go. And then obviously we're in a no-go painting purple and pink bars. And this is where we are here, strong no-go trend. And so this kind of, you did get a 1 bar of a transition, and then you got your no-go here, sort of right up around 3918. So, it kind of did. It's always nice to see the charts and to see them working as you'd hope they would, and it recognized that trend change fairly well. And just to point out what we were just talking about, you see this oscillator and how valuable this zero line becomes, because as this price climbs slowly higher, you can see that we get the support we're looking for every time. And these icons, if you can see these green circles, if I zoom in a little bit more, maybe you can see them a little larger. The green circles here are trend continuation icons. And that tells us we're in a go trend. The oscillator has found support at the zero line. That means momentum has now come back in the direction of the go trend. So we're saying, okay, yeah, relatively low risk opportunity to participate because momentum came back in the direction of the trend. And you can see it was on a max squeeze as we went sideways. There was a little bit of volatility compression, and then the trend continued. And you can see that support happening over and over and over again, and then until it doesn't, right? And then here is where it doesn't. Now we say, okay, we did not see the support we were looking for at the zero line. Then we see an amp. So now you've already got that little bit of warning ahead of time. Then you've got the amber bar. We haven't seen an amber bar since way back here. Then we get the first no-go. So if you're still holding this, thinking you're in a go trend, you've had 1, 2, 3 reasons to change your mind. And then now we're in a no-go. And now we'd be looking at the same thing. We'd be looking at resistance at the zero line. So it briefly dipped positive here on this rally off the lows. Now we're really watching this zero line again as we see another squeeze build up. If this trend is to stay healthy, we would expect this to now get rejected by the zero line and roll over into negative territory. And that would tell us trend continuation in the no-go trend. And we'd get a red circle this time above price, telling us that relatively sensible place to enter because momentum has come back in the direction of the downtrend this time. So that's what we'd be looking for here.
Right. Basically, what you're saying is there's resistance here in the oscillator at 0, right? And a tick up into positive territory would kind of go against the downtrend.
Yeah.
Right. And then, if it doesn't tick up, it's game on for that no go. I love the way that it, we opened at 9:30 and the reports came out at 9:45. So you had about 15 minutes to kind of see what are the institutions thinking,
yes.
Right? How are they coming in? Well, it kind of stopped the trend, right? They came in and they sold a little bit, right? But we're still we talk about not trading ahead of a number.
Yeah.
We want to be very careful about trading ahead of these numbers. And, this big move surprised me because of tomorrow, because these numbers that actually came in were actually positive. And my thinking is, well, the they've started their meeting. So are they taking this data into consideration? Maybe yes, maybe no, probably not. But then it's after the meeting, right? That they'll still have to think about it and say, well, maybe there is more work to be done, or maybe we have to come off, or whatever it is. But I like how it quickly went from teal to amber to pink in the span of 3 bars. That's really interesting.
Yeah, and it's like you said, it wasn't bad news. It's an interesting move today because also we've had strong earnings, right? We've had some better than expected earnings, and so that's what people were talking about with this morning, thinking it was going to open up 1%, and then of course it is quite a strong move. So interesting to see who's selling or why that's happened. But to go back to your other point, you can also see that the volume was heavy too at the beginning, but now you're seeing resistance. And you were saying that it's interesting to see that this should be acting as resistance, and if it falls away, then it's game on for the no-go. Well, that comes out of the theory behind it is that if you are in a trend, then does it make sense? Let's say we're in a downtrend. Does it make sense to see excessive selling? Well, yeah, of course, enthusiasm to the downside when we're in a downtrend. So you're fine, you're going to get oversold readings. But then if it comes back to neutral, should you see any enthusiasm to the upside if the downtrend is still strong? No, you probably in theory you shouldn't. So that's why that becomes a relatively sensible objective level for resistance. This little blip here, we really rallied quite strongly for a few bars, but now we're right back at that zero line. People are sort of thinking we've had this big move. We're moving sideways now. We're seeing some volatility, reduction, and we'll see now, is this a base for the day? Or as you said, if we roll over here, will we set new lows as we sort of maybe move lower than here? So that's sort of how it's supposed to work, intraday or to the downside as well as to the upside. Because people do ask me all the time, is this a long only thing? And it's like not like any, but like a lot of technical indicators, there's, a bullish cross in the MACD and a bearish cross in the MACD. And so we want to be able to also get a sense of the other direction.
Yeah, for sure. You want to capture that. Can we take a look at the NASDAQ? I want to see, because we talk about the differences during earnings season about the different index. So maybe if we take a look at the E-mini NASDAQ or the E-mini Russell, if we have time, we're running up a little bit against time, but we'll take a look, because the reason why I say that is they have different components in the index. Earnings are coming out every day, different companies, so different indices might move a little bit differently, certainly a little bit out of line from each other. So this is interesting. Looking at this, if I were to look at this, I'm seeing that zero line on the squeeze indicator has held.
Yes. Yeah, it is interesting, a little bit different. And we're at a new low that we weren't at on the E-mini for the S&P. So we've already taken out that low. We were looking at before. I think we were a little bit higher over here, and we were sort of dealing with that resistance at the zero line. On the NASDAQ, we've been rejected by the zero line, as you'd expect if the no-go is healthy. And you can see if we zoom in how we've been given a no-go trend continuation icon, which is that interplay between the momentum panel and the trend, saying that momentum is now back in the direction of the no-go. This is our continuation icon. And so, interesting, a little bit different, a little bit ahead of where we were looking at before.
What I'm also seeing, though, is that divergence coming in is very slight, but I am seeing higher lows on the oscillator, and I'm seeing lower lows on the price. So, you've got this indication on your chart that, this is this trend because we came away from the zero indication or the zero line on the oscillator. Yes, we're in the direction of the trend, but we also could be seeing a classic case of divergence and maybe an uptick in price, possibly.
Yeah, you absolutely could be. We could be basing for the day, right? Because this was a big move down. And look right here, now we've come back up to test the zero line again. So if you'll see how this obviously will move as the bar is calculating, but once it closes the bar then nothing will ever get changed. So now, like you said, we've actually now put in another higher low on the oscillator. If we stay at this level, then we'll be testing the zero line again with another instance of a higher low with a lower low on the price. So it just allows you to, excuse me, Tom, it allows you to take all the technical analysis and sort of look at it without being overwhelmed by panel after panel after panel.
For sure. Alex, I could talk all day, as you know, we've done that before. But I want to thank you for coming on. Where can people find you in the meantime until you get on the ecosystem?
Yeah, in the meantime, www.GoNoGoCharts.com, info@GoNoGoCharts.com if you want to shoot us an email, but we are going to be there soon. So I'm excited to be doing a lot more of these with you, Tom, and we can be pulling up charts together in the NinjaTrader environment.
I love it. I love it. Thanks so much for coming on. Tell Tyler I say hi.
Will do. He's in India right now. He's at the CPT summit in India. So
great. Good for him.
Traveling all over the place. Yeah. Yeah.
Hopefully you're on a big screen. We're on a big screen right now somewhere in Mumbai or, New Delhi, wherever he is. But tell him I say hi, and thanks again for coming on. We'll have you on again soon.
Anytime, Tom. Always a pleasure.
All right. Thanks. And thanks to everybody for coming aboard and watching to see what we have to say. We'll be back here. Jim will be back here at it with the bars closing show. We'll be back here next week. Next week, we'll have Chris Tubby from Cymex on talking about, I think the big day, election day. And in the meantime, have a great trading day.